And from airports to airlines, the Aviation Outlook Australia Pacific Conference wrapped up in Sydney today, attracting several players that have taken to the skies in our region recently. One of those is AirAsia X, the Malaysian-based low-cost carrier, which started flying out of Australia to Kuala Lumpur in April. Low traffic out of Europe has caused the airline to drop its London flights and focus hard on connections across the Asia region. I spoke to AirAsia X chief Asran Osman Rani. Asran Osman Rani, welcome to the programme.
Thank you for having me.
Well, it's day 2 of the conference. You've had a chance to speak to many of the players. What's the mood down there?
Well, I think it's probably mixed. Some people are concerned about the situation in Europe and some of the domestic issues with the mining sector. But at the same time, I always see a lot of opportunities coming up from times like this. Certainly as people become more price conscious, looking for value, there's always an inherent demand for travel. And I've always said when we went through with Australia in 2008, 2009, 2010, there's been crisis after crisis. But travel has generally been very resilient.
Well, the low-cost carrier model certainly seems to be the most successful in the Asia-Pacific region. How fast are you, in fact, growing?
Well, you know, Australia, interestingly, now represents about 30% of our business for AirAsia X. And while we're expecting to double our fleet by the end of 2014, we also expect to maintain that 30% ratio for Australia. So effectively, we're looking to double our presence in Australia over the next 2.5 years.
And what about profitability?
It's been a challenge for us for the first half of this year because Europe really dragged us down. But since we've stopped flying, we've returned back to a positive cash performance in the month of June. And the second half of this year looks much better because there's also the respite in fuel prices that's helping us a bit.
Now, you, of course, got to Australia ahead of Scoot, Singapore Airlines budget carrier. I'm looking at Scoot's deals on the website today, $149 one way, Sydney, Singapore. How sustainable is that, lovely as it is for Australians?
I don't know what their cost structure is, but for us, what's important is making sure that you have a really low cost position, because otherwise simply dumping prices if your cost is high is going to be a challenge. But I think the other bigger point is people ultimately are not going to get on a plane purely for the sake of a price, but it's the range of destinations and frequencies that you offer that really will compel people to travel. And I think what we offer is a wide range of destinations across Southeast Asia, a lot of connecting frequencies to Bangkok, Phuket, Singapore, Bali, Langkawi, Penang, so many places. And I think that's probably what would hopefully set us apart.
AirAsia X also, I understand, operates the world's lowest airline unit cost. Now, is this also because you say you've got the highest aircraft utilisation, or are there other reasons?
50% of that unit cost difference does come from the ability to extract more output from the aircraft. One part is aircraft utilization, flying 17 hours a day as opposed to 12, 13 or 14 hours a day. And the other part, of course, having more economy seats because we don't take up as much real estate on the plane for first class, business class and big galleys.
Yeah, it's pretty tight in there, isn't it?
Yeah, but other parts also includes labour productivity, airport turnaround productivity. All these things contribute to the cost difference, going direct to consumer using online marketing. And
presumably you also make your money very much out of the add-ons, the cost of, having your seat allocated to you and food and all that sort of thing.
To the consumer, they look at an all-in price, and we have to make sure that we still offer a compelling value even with all the add-on prices. But the ancillary model actually is a key way that drives down cost because a lot of, for example, food and beverage alone, right? If you offer it to everyone, there tends to be a high degree of wastage, especially for late-night flights. It requires a lot more labor cost to serve everyone as opposed to the people that only want the meals and the way the meals are packaged.
Now, you'll know, of course, full well that Tiger Airways, which is a third owned by Singapore Airlines, their Australian arm got into quite a lot of trouble here last year. And in large part, I think it was around safety issues, pilot training, pilot experience. Are there lessons for you and other airlines here?
We're focused on continually engaging with the key airline, the key aviation regulators. We spend a lot of time making sure we share data, meet regularly, so that they understand the model. We've had some very good productive sessions with the regulators in Australia, and they continue to express their confidence in our model and continuing to allow us to fly here. So I think engagement is key rather than keeping everything to yourself.
And presumably transparency over the balance between cost and safety.
Exactly. That's exactly it.
Let me ask you about the Chinese market, because looking at a low-cost airline like Spring Airlines, a Chinese airline, that is hoping to move from 13 to 100 A320 planes by 2015. That sort of growth is remarkable. Is that a safe bet in China?
With China, I think there's tremendous potential because a lot of aviation tends to be concentrated so far in the three big cities of Beijing, Shanghai, and Guangzhou. And one of the key things I think for us is making sure that we have or take advantage of a multi-hub approach. So rather than starting from one country and trying to reach out to the world, where basically you're still providing a flight base to one country, but you can connect the destinations that you fly through many points. So for example, besides Kuala Lumpur, we've got hubs in Bangkok and Phuket, Bali and Jakarta, Manila, Japan, and some of the new ones that we're opening up. And that means we can fly into China from multiple points. So this is one I think will be how the LCC landscape will evolve in Asia Pacific.
Asran Osman Rani, thank you so much for joining us.
Thank you for having me.